Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll also focus on several pockets that are in action today to help you really understand which are the pockets that you should be focusing on to reap maximum profits in equity markets. We'll also focus on the big report that has come in today from global brokerage firm CLSA, which has now turned overweight on India and increased its portfolio allocation as well. What will this really mean, and will this also indicate that the current momentum in the market can further continue? We'll be joined by an expert pretty shortly, but first up, a quick check on how the markets are doing at this point in time. Choppiness in trade throughout the trading session, but the markets have been building on the momentum. Right now, about a 0.6% surge on the Nifty. We're above the 19,800 mark yet again. So 19,819, the current level, 130 point of a surge for this one. Most of the sectors of the Nifty are actually supporting the market move today, barring just very minimal losses coming in on, say, the PSU banking index, about 0.6% of a decline being seen there. Rest of the sectors are all up in trade. The top sector gaining in strength is the FMCG space now, up almost 1%. The Nifty Auto is up by 0.9%. Oil and gas, small cap 100 index is also up by about 0.8%. The mid cap 100 index about 0.5% of surge coming in. And apart from this, you also have the healthcare index, the realty space, private banks, financial services and metals, all of them buzzing in action. The top gainers on the Nifty index, however, many stocks from various sectors coming up in trade. Hero Moto is now emerging as the top mover, 4% higher in trade. You also have Wipro from the IT pack that's buzzing 3.3% higher. From the cement basket, you have Grasim, Ultratech Cement, both of them up in trade. Pharma pack also buzzing higher. Dr. Reddy's, Cipla moving up in trade 1.5% each. And we're also looking at Reliance Industries in strength right now, and that is the one that is giving this extra fillip to the markets right now. Reliance Industries right now is trading at 23.45 with a 1.6% surge too. As far as the broader markets are concerned, the Nifty 500, you do have various stocks that are buzzing and seeing some strong moves come in. Like Alembic Pharma is the top gainer on the Nifty 500 index right now, 6.5% higher in trade. City Union Bank constantly on the move this entire week, 4.5% up move for this one. E-Clerk Services also up in trade. Bikaji Foods also up in trade, about 3.5% higher. You also have Archean Chemicals and Siet, the other movers at this point in time. Time to welcome our guest on the show. Sunil Damania now joins in. He's the Chief Investment Officer of Markets Mojo. Welcome, sir, and thank you so much for taking the time out for this discussion. A quick outlook on the markets first. How do you see the markets poised? We did see that knee-jerk reaction because of the Israel-Hamas war, but immediately the markets bounced back as if there is nothing, and they've made peace with the bulls, as the bulls have made peace with the war as well. Your own sense of where the market's headed?
Hi, Sakshi. Good afternoon. Thanks for having me on the show. I think if you remember last time when we were discussing about Canada and India geopolitical tension, and at that point of time we suggested the market will not discuss about that next 1 week, and that's what exactly has happened, and something similar will happen with Israel Hamas. I think one thing which has become very certain, and I think market has learned this in a very smart manner. There'll be a geopolitical tension, whether we like it or not. This will keep coming every now and then, and it can spook the market sentiment for 1 week or so. Not beyond that. No one talks about Ukraine and Russia war. It's still on, but no one talks about something similar will happen with Hamas and the Israel crisis. If you remember, Sakshi, since beginning of 2023, we have been coming on this channel. We've been saying continuously that Indian market is in a extremely bullish zone. Market did not move the first quarter, but that was just an average. And those who invested on those market, having gone through that pain period of Jan, Feb, and March, market gave a bountiful returns to the investors. You did ask me last time about the mid and small cap, and I did suggest that it's just a temporary blip. It has to go up, and it has gone up. So I think overall, if you look at, there are two factors which are basically driving this rally in the market. And I am very confident while Jerome Powell used higher for longer, okay, I think something similar is for the Nifty and Sensex, higher for longer. It's not going to be on in a short period of time. The two main
Yeah.
factors that we need to reset is that the growth in earnings and the liquidity. I don't see any of these two factors are showing any sign of weakness. The earnings growth would be very, very good for India Inc. Number one. Number two, even if you look at the return on equity of India Inc., that was going to be extremely well. And second thing, I think liquidity. We did see some FI outflow in the month of September, but I'm very confident that FI will come back very strongly by mid of October to the Indian equity market. So liquidity and earnings growth is a deadly combination that will keep market moving up, up, and up. And hence, any negative news, for some reason, if it comes, that should be used as an opportunity rather than getting out of the market.
Okay. Before getting into several segments, the pockets where you're bullish on, and to take your view on all of that, there's this very important report that's come in today, and that's CLSA, which is again, changed its stance as far as Indian equities are concerned. From an underweight stance, it's now overweight. It has also increased its portfolio allocation to 20% overweight from 40% underweight earlier. Could you explain to us what this really means, since they are saying that they are 20% overweight above the MSCI levels as well? What would this really suggest?
This clearly suggests that there will be more flows coming into those who will follow CLSA strategy. Their customers will basically try to allocate more towards the India, and hence our equity flow will come. And of course, they given certain stocks, and you did mention one of the stocks in your opening remarks. I think more flow will come to those companies, and then those companies will keep moving up. But I think we need to understand we should not get too much excited about this various foreign brokers reports. If you look at the history, when they are supposed to be overweight, they were underweight, and when they are supposed to
Yeah.
be underweight, they were over. So I think somewhere we need to understand the overweight was supposed to be, had they come out in the beginning of 2020 overweight, which we did. I think one would have definitely made a lot of money. Even if you look at the
Correct.
company that they mentioned, I'm not going to discuss about the company because not appropriate on my part. But even if you look at those companies, I'm doubtful that many of them would outperform from this level. Of course, some of the companies may outperform. That's a different story. But on a set of companies that they've given, very few will outperform. So I think, yes, it's a positive. It will encourage more foreign brokers to come out and mimic what CLSS said, because that's what I've heard, I've observed. If one comes out with a positive, other five will come out positive, So I don't give any credit to them, actually. I don't
Okay.
basically follow, because if you follow their advice and start investing or not investing, I think it will be a little. In fact, channel like you should do a nice study about saying whenever they say overweight or whenever they say underweight, what happens to the sectors. And I think we'll have interesting data and debate on this.
Okay, point taken, and we shall definitely do that study and get an in-depth conversation going on that as well. But like you pointed out, of course, looks like they've actually realized their mistake, that they were underweight for far too long, because between October 2022 and March 2023, they had maintained their underweight position of India. And the markets have only risen despite all the challenges and headwinds of slowdown concerns and the global market dynamics changing as well. India has really risen as a shining spot right there. What they've also mentioned as 8 factors supporting their overweight position: strong credit impulse, favorable energy prices, improving external balances, robust GDP growth, incremental EPS, increased profitability, and a positive macro outlook, as well as a rise in the foreign asset accumulation. But they've also given some concerns about the valuations and the monetary policy inflexibility as far as the RBI goes. How would you be realizing what the positives they are mentioning and the concerns they are mentioning at this point?
So I 100% agree with the positives, and that's we have been saying since last 12 to 15 months, to our investors. In fact, we have said, we came out with one beautiful presentation saying that 30 is equal to 5, which means that the kind of wealth that we have Indian equity market has seen in last 30 years, similar kind of wealth we will be able to see in next 5 years, and we maintain that kind of stuff. So I think we agree with the positives. I don't agree with the negatives, and I shall explain you why. They say that valuations of Indian market is this. See, we need to understand that you look at two company, am I right? And one company which is not growing, another company which is growing. Where would you pay higher P? Definitely a company which has been growing. India is a growing company, is a growing this one. We should demand. Why are we going by the historical standard where our ROE was low? Today, ROE of India is increasing. If that is so, why should not India command and higher price to earning? Why are we so? And even if you look at the 10 years average of price to earning of India, we are still at the same 10 years average. We are not substantially above. So I don't think valuation is a concern. And that not only applied to India, even that applies to the mid and small cap. In fact, I did go through like last month, we had a little mini scare on the mid and small cap. And I did mention at that point of time, the valuation point of view, India, even for the mid and small cap, they are not in a very so-called bubble zone. They are very much in line with what historically they have been commanding. So I don't think any worry as far as valuation is concerned. And on the contrary, I personally believe we should command much better valuation than what we have been commanding. Why? Because this is the first time in the history I can't recollect where India Inc. balance sheet has been so much deleveraged. Your return on equity is so high. There's the better corporate governance started, and the credit growth has been happening so nicely. Why should India not command the higher P price to earnings? So I think we are just on we are just the beginning of a bull run. I don't think valuation should at all is a concern for the Indian equity market.
All right, a bullish view that we are at the beginning of a bull run right now. So where exactly would you be putting in fresh money, allocating a fresh at the starting point then as per you?
So, unfortunately, our views are little more enduring. We don't keep changing our view on the sectors on a quarter to week basis. So I think at the beginning of 2023, we did mention that we are bullish on IT. In our PMS, our highest exposure into IT software as I speak, because we believe that risk-reward ratio has been extremely very, very good. We have a lot of exposure to paper stocks, and today, fortunately, paper stocks are all running. So that we are bullish on pharma. You did mention about one pharma company in the opening remarks. We are bullish on pharma, which we were bullish in the beginning of 2000. We are also bullish on capital goods because we believe that sector should do extremely. It's doing extremely well. And another contra call that we have right now is a metals. We do believe that industrial metal do very well. And if someone has a patience for 6 to 9 months, I think chemical, if we look at the risk reward ratio, within chemical, there are very good companies which are available where downside risk is limited, but upside potential is extremely good.
Okay, there are 4 sectors right here where you've mentioned IT, paper stocks, pharma, as well as some chemical stocks as well. So let's start off with IT first. Of course, the earnings season will kickstart today, and therefore all the eyes are going to be seeing and understanding what TCS really comes out with as a guidance. That could be the starting point for all the IT names. There's also the buyback announcement that is expected, and that would also garner a lot of investors' interest. Over the last few months odd or so, we have seen the mid-cap IT firms really outperform the large cap names, even on the stock market performance perspective as well. How would you be approaching the IT space vis-a-vis both of these large caps versus mid caps?
So we do have a PMS, and I said we have a highest exposure to IT software. Within IT software, we have too much exposure to mid-cap IT. We believe that mid-cap IT should outperform the large cap. But coming to the broader story about the IT software, I think there are too much negatives. And see, market always looks what is not discounted in the price. And if you look at today's valuations of many of these IT software companies, market has discounted almost all negatives. Unless there is something major negative comes in, I don't think much of a downside risk to any of the IT software company, whether it's a large cap or a mid cap, number one. Number two, if you look at the commentary, I'm not saying the commentary will be very excellent even from the company that's going to announce numbers today or some of the other large cap companies. I think we need to understand. So when you invest in the market, you should always look at the risk versus reward ratio. And if you look at the IT software as we speak, the downside risk is very, very minimal because all negatives are in the price. And hence the positive, if you remember in the beginning of 2023, we said Bank Nifty will underperform. And if you can showcase the graph of Bank Nifty versus IT software, ITD, you would see clearly IT software outperform. At 2020 beginning, we said all positives there and the price for the banking sector. It was like a honeymoon period. What best can happen for them? That everything is there, best, am I right? And hence they need to underperform going forward. That's exactly what has happened. We were contra at that point of time, and we have been proved 100% correct on that front. Something similar with IT software. There's almost everyone will talk about, give you 10 reasons why IT should not outperform. But it's there in the price. There in the price, it makes risk reward much favorable.
So even at this point in time, would you suggest investors can continue to start investing if they have still not yet invested or put in allocation as far as the IT space goes?
Yes, ma'am. Just to be on a safer side, I must also disclaim that we have bought very big quantity of one of the IT mid-cap IT software company today only in our PMS.
Okay. Okay, understood. So good time to start investing in IT space as well. Well, great speaking to you, Sunil, and thank you so much for taking the time out for this discussion. Always great insights that you share with all our viewers. Thanks a lot for being with us. The markets continue to surge higher, 118 point of jump there, 19,808 currently on the Nifty 50. You do see a lot of momentum building up right now. Several pockets really supporting in the market move. Realty space, auto, FMCG, the clear winners in trade today. And just like how Mr. Damania really pointed out, IT space continues to be one of his favorites, and he continues to be bullish on the space. Apart from this, pharma, paper stocks and chemicals, select buying opportunities there is what he has warranted as well. With that, we'll wrap up this special edition, but do stay tuned for a lot of news coming in for you on our platform. What you should also get ready is for our special series, that's Market Masters, where market gurus reveal their investment strategies for a winning portfolio. Join us on the coming Monday, that is October 16th, when Vijay Kedia, the Managing Director of Kedia Securities, will join us to get his market insights and in-depth market analysis. You can also send us your queries on the number that's flashing on your screen, 730-308-0488, and these questions will be taken live. Hello and welcome to the CEO at BT series. Here we bring you up close and personal conversations with the creme de la creme of India's C-suite to fetch you pertinent industry insights and personal anecdotes. Today, Business Today's managing editor Anand Adhikari is in conversation with Rishi Gupta, Managing Director and CEO of Fino Payments Bank. Payments banks in India have marked a path-breaking step in achieving financial inclusion in urban as well as in rural areas. However, they have limited banking licensing permits, only payments, remittances and the acceptance of the small savings and current accounts with no credit or lending activities. 6 years ago, the payments